Hi and good afternoon. Welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan on the 8th of May. He's the head of economics and strategy at Mizuho Bank in Singapore. Now, Vishnu, as always, lovely to have you on the show.
Hi, Brian. Always a pleasure to be here. Thanks for having me today.
Now, Vishnu, before we get your sagely advice, we're going to take a look at how markets have performed across the region. And we'll start with crypto markets. Bitcoin is at 28,181. It's down 2.29%. Ethereum is at 1,861. It's down 1.78%. Now, looking across the regional equity markets, we'll start at your home base. The Straits Times Index is down 0.15%. Bursa Malaysia, however, is up 0.06%. Shanghai is up 1.56%. The ASX All Ordinaries is up 0.76%. The Nikkei is down 0.64%. The Hang Seng is up 0.93%. And running out the numbers, we've got a Kospi, which is up 0.65%. Vishnu, your views on market performance in the first half of the day?
It looks like markets just were quite happy to piggyback on the strong finish in the US on Friday. But here's where things are a bit strange. So typically, we've always had or we've for a while now had a situation where bad news is good news. Good news is sometimes good news in the US, specifically in the sense that if you get strong numbers, markets tend to leap one more step ahead and say, what will the Fed do with this? I mean, and if that answer is something towards Fed tightening or not stopping in rate hikes, markets may not like it. Sometimes they are okay to still rally, but certainly this time around, starting with last week when the Fed most distinctly suggested it's going to pause, markets were down. So that's news to us. So the two reasoning behind it is one, I think the Fed being done and pausing from here on is a given. Markets have a much higher bar. So until and unless the Fed suggests it's going to start cutting quickly and rapidly, markets are just not seduced enough. So they've got a much higher bar. And second, now they're just looking at the economy and saying good news is good news because that tells us that the economy is not crashing. And so the hot labor market number that came out, the strong jobs number, over 235,000 created plus unemployment down to 3.4%. I think they're drawing relief from that the economy is not crashing, consumption can hold up, and so markets are somewhat up. Asia is following that, and I think there's also some aspect of relief because almost every weekend there's been some fear about US regional banks. The fact that there wasn't a bank going under in a big way, I think is also a sense of relief that markets have this week. Nevertheless, we don't get distracted. In fact, there's underlying caution because apart from the US banking situation, the other one that they continue to watch is the US debt ceiling because just over the weekend, Janet Yellen has warned that if the Congress doesn't get its act together and they don't raise the debt ceiling, a default is something they could be staring down the barrel of. And so that particular risk remains, and we shouldn't be seduced into complacency by markets being up for today.
Now, Vishnu, then we've got pretty good PMI data out of Japan, which is at 55.4, higher than March's figure of 54.9. It's its fifth straight month of expansion. We also have mutterings from the Bank of Japan that it is concerned about accelerating inflation, which is something that I've not heard in decades. Um, Obviously, what's your take on this in the larger scheme of the concerns around global inflation?
Yeah, I think if we take a step back, what we realize is that there continue to be soft spots or downside risks in manufacturing PMIs, depending on which part we're looking at. Some parts are more resilient, but overall, manufacturing PMIs are not firing away on all cylinders, whereas services PMI, as you pointed out, have been re-accelerating. So that's the reopening story, whether it's in China, outside of China, and this is also the ongoing, global macro theme where there is a shift from consumption in goods to consumption of services, including travel. And let's bear in mind that this has also got to do with tourism being revived because tourist spending in your country will also revive the PMI services as well. So all this going on, And I think you're really sharp to ask the question about inflation, because it brings us to the question of inflation. Because now central bankers will be sitting back and thinking two things. One is, okay, goods inflation is going into disinflation or deflation outright, depending on which part and which good you're looking at. The question then for them is, how much more services inflation upside, or in some cases re-acceleration there could be, which components will be sticky, whether they need to have a policy response to that. In Japan's case, I think the consumer spending, or at least on the ground spending on services, so on and so forth, does bring into view that inflation is picking up more broadly. They are, however, not losing sight of keeping the 2% inflation target goal intact. And I don't think it's a foregone conclusion that inflation is now on a runaway mode. I think they're still in a period of assessment as to whether this will be durable, but certainly they do recognize that it's accelerated. For other countries in particular, the services inflation could become a bit tricky because it's completely at odds with the manufacturing slowdown. And so policy making becomes more difficult because you've got a sticky component on one side and you've got a little bit of pain on the other side, and you just really don't know which one to tend to.
So, Vishnu, then we've got a lot of things happening this week from an events and data points that could potentially move markets. What are you particularly looking out for?
We've got GDP numbers coming out. So we've got Malaysia's GDP, and then we've got Philippines' GDP coming out. So we're looking at how Q1 numbers shape up. The big takeaway for us here is that there could be, in some cases, instances of resilience, growth factors holding up. In many cases, it's going to be a question of what was traded off. Services probably continue to pick up. Some aspects of manufacturing will be weak. So the aggregate numbers may understate specific sector risks, and that's something we don't want to lose sight of. We want to keep that in mind as to how things continue to evolve. There may also be, in coming months, coming quarters, some disappointment that the big China stimulus story didn't have a much bigger spillover. If you're talking about what markets are really keeping their eyes on this week, apart from the Bank of England meeting, it's really US CPI. Because after a hot labor market number, markets are just going to see whether inflation is causing any concerns and whether that could lead to a surprise rate hike in June. Because as of now, market pricing is not just for no more hikes. They're even pricing in rate cuts as early as July, if not September, which is getting a little ahead of the reality. And so the inflation numbers in US will be a good guide as to what extent there will be a disappointment in terms of Fed expectations and what the Fed delivers. So that's really worth looking at. But in terms of headline risks, I think headlines on the US debt ceiling situation would be something that markets will become increasingly concerned about. So once they get past that, the data flash on CPI, this is what they'll be worried about, the debt ceiling risk.
Now, Vishnu, as always, thanks for your insights. Thank you for coming on the show.
My pleasure. Thanks for having
We've
me,
been
Brian. Always a pleasure.
We've been speaking to Vishnu Varathan, Head of Economics and Strategy at the Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. You can watch this or listen to us on various platforms, either on our website, BizTech Asia, www.biztech.asia, or our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.